Welcome back, everybody, to the Be the Trader. Today, I have a very special guest. It's someone that I'm hoping you've already heard of. If not, you're going to hear about her story today. It's a funny how things work out. I actually met her briefly. I believe it was in 2016 at a conference, and it's right when she was up and coming. So it's a pleasure to bring her on the show today. Airplane Jane. Airplane Jane, welcome to the show. I appreciate you being here.
Thank you so much, Alex, and thank you for asking me to participate. I'm always happy to give back and share with other traders and future traders at the same time.
Absolutely. I'm glad you agreed to be here. And so let's get started. If you could tell us a little bit about, what got you into trading, and then we can go from there.
For sure. Well, right off the bat, I was originally in the financial world all the way back in 2000. It was my second job out of college, and it was simply because I grew up in the States. I do live in Canada now, so I'm a U.S. expat in Canada, to give you that background. And when I graduated from college, I started off working in a bank, and I was in Memphis, Tennessee, and I was from a big city, so I was like, you know what, I just want to be in a bigger city. So I moved to Atlanta. The jobs that were hiring were brokerage companies. So I started working with Solomon Smith Barney. I got my Series 7 there and experienced the first layoff of my life. And that layoff actually was a blessing because I ended up going and following my passion of culinary school and living my life. And then the second layoff of my life was when I immigrated to Canada. I was 8 months pregnant with my first daughter, and that's what brought me back to trading. So if there's anyone out there that's dealing with a layoff, many times it can be the best thing of your life. It will help you to really do some soul searching to see what you're passionate about. And for me, it also came with, I had that layoff. I was in tears at my breakfast table, right? What am I going to do? And my husband reminded me about a great value trade where I took my money and I created 10 times that wealth. So I was like, you know what? Yeah, maybe I'll look at it, right? So then I started studying. And originally at the time, Timothy Sykes was really the first guy that was out there. And so that's who I started following back in February of 2015, and now we're here in April of 2020. So been loving it, super passionate about it, and life has definitely progressed from learning the penny stocks, which I found in the beginning. I also started out with a $6,000 account. I had a 6-month-old baby, and did I follow the rules? No, I did not follow the rules in the beginning. I blew through the account, so I am a big advocate for paper trading while you're learning, because it's going to be so much easier to transition to real money when you understand what you're doing, as opposed to battling the psychological aspect of it in the beginning while you're trying to learn. And that can be really, really tough. So I came back to trading after my second layoff, and that's really how I came back to day trading.
Nice. And so first off, man, that had to be earth-shattering to get two in a row, not in a row, but two happening where you had to, the layoffs. So I'm super excited that you're now here and where you're accomplished. That's awesome to hear. And, I'm curious, so on what do you feel like for you, what did you learn the most when you blew up that $6,000?
I needed to stop and I needed to really study and really listen to the rules. And then
Yeah.
once I started paper trading, that's when it really clicked. And then it was slowly going in with money and then, slowly increasing that. And that's really how it clicked.
How do you feel about people? Because there's a side of it, if you just jump into paper trading first and there's no emotions because you haven't traded real money, right? Rather than you experience the emotions and then went in. Do you recommend one or the other? Or
I definitely recommend learning first, right? Because you can give a brand new 16-year-old driver a Lamborghini with the keys, right? Have they gone out on the highway? Do they understand acceleration? Do they understand that G-force when they're going around a curve? Probably not, right? So if you are putting yourself in that scenario where you're like, yes, I've got this Lamborghini, I'm going to go and I'm going to go super fast. Guess what? You'll probably crash and burn just like that brand new driver because you don't understand what you're doing. If the people have experience, it's a different story. I was in the value trading world before, but it's completely different from the day trading world. And so I highly, highly recommend learning first. You can still experience those emotions with paper trading, but you're going to experience the psychological aspect in so much more of a negative way if you don't know what you're doing. Because you're going to get frustrated that you lost, you're frustrated that you're blowing up your account, you're frustrated that you don't know what you're doing, and your mind is stuck on that instead of being a creative learning person.
Yeah, I'm glad you said that because I think trading, the longer I've done it, the more you start to realize the more creative you kind of have to be. Like you kind of have to have that open mindset and figure out, what I learned from this trade and take it to the next trade. Now, when you said there's some rules that you had to learn, what were those specific rules that you're referencing to?
Well, for sure, I think risk management right off the bat. A brand new trader might be saying, yeah, I hear this all the time, risk management, but what do you mean by risk management? Okay, so you have your account. We'll say it's a $25,000 account. You make the PDT, you're psyched, you have $25,000, you put it into a new account. So there's no PDT rule for the people in the States. So, well, if you're at 25,000 and you have a margin account. But you decide that you want to go ahead and put that 25,000 all on one trade. Well, it's like those people that go to the craps table and they take all of their money right up front, they put it on one number, one roll, boom, they're done. That can happen, right? So
Yep.
why wouldn't you want to go ahead and break it up rationally into smaller amounts, smaller risk, right? So that you are going to be able to survive in the trading world longer. Because if you're risking everything all in one trade, the chances are of that loss being devastating is much higher. If you're risking a small portion that you're comfortable with losing, then hey, that's a small portion. You survive again to do another trade and to learn from that next trade as well.
Is there an ideal situation? Like, how did you go about when you started to see your progress? You started to go into actual trading the real money. How did you slowly progress? Like, can you give an idea of how that was?
Well, at first it was really small positions. Like now, it's a blessing that you don't have to pay commissions with it
Yeah.
because you can go in and out very easily. So you could go in and out with one share, two shares, five shares, and you could test it out that way. That's what I did in the beginning. I would go very small, 10 shares, and I'm like, okay, this is going to be my entry, this is going to be my exit. Lay the groundwork for that trade before you even get into it. So you know your exit if it goes against you, you know your exit for getting out. Another way that I like to assimilate it is if you were going to take a road trip, right?
Hmm.
Say you live in Boston and you want to drive to Florida. What are you going to do? First, you're going to look at the map, right? You're going
Hmm.
to see what road you're going to take. You're going to see probably what time the traffic is the worst, right? So you want to check the volume and the volume of the stock, right? When are you going to get in? When are you going to get out? And if you find yourself and you've gone off on the wrong exit, how long are you going to go before you realize, hey, wait, I'm going the wrong direction. I need to get out of this. And maybe I need to flip my position. Maybe I need to go the other way. My thought process was wrong. And you want to be able to flip it if you were wrong in that trade.
Do you find that easy for you to flip? Can you do that easily for yourself? Like you'll just flip your position right away? Like, just curious.
More so now because you met me back in 2016. And
Hmm.
then I wrote my first book in 2017 after my daughter was born. And I hosted my first seminar then too. And I met um, one of my interviewees from my book, which is FMJ Trust Transition and Trade, which FMJ stands for my job. And so I really met her and
I got
learned.
it.
Yeah, there you go. The light bulb went off. I wanted
Yeah,
to
I
keep
was
it. I
like,
wanted to keep it, in case you
it means
monetize it. I
F
didn't
my
want to put any
job. There you
words out
go.
there, right?
Yeah.
So I met Stephanie Kammerman, and now I work with her as one of her trainers in the training pit, and we trade around the dark pool. So it's different because it's less just scanning necessarily for stocks. Yes, you scan for the stocks in the morning, but also having that secret edge of knowing what these billionaires are doing with their money makes it much easier. And so it makes it easier for you to be nimble. If you're on the wrong side of a trade, hey, you know what? Maybe there's a $64 billion position and I don't want to go against that, right?
Yeah.
I'm a little person against $1 billion position. Peace out. Like, no problem. I can be wrong and I'll go the other way and I'll profit much more nicely.
So what do you mean by, because I don't understand the whole, I get like the idea when you read trading books about dark pools. Could you dumb it down for me and help me understand what you mean by I have access to a dark pool? Okay, what does that mean?
Right. Well, actually, everybody has access to a dark pool. If you hide your order, that order is going in a dark pool. Just right off the bat with your broker. If you have that ability to hide your order, then it's going to go into the dark pool for a trade. So pretty much anybody can trade in it. However, the dark pools were set up back in the 80s for preferential fills, so better fills for these people, as well as better commissions, which nowadays you don't really have to worry so much about commission fees. But if you're filling a 1,000,000 share order, that's going to be a lot of commission, right? So you also have to think of it this way. Say, for example, Warren Buffett wants to buy 2 million shares of Delta Airlines. If you're watching the level 2 with the bid and the ask, and you all of a sudden see a massive order for 2 million shares, would you let it go down there, or would you probably buy before you saw it? Right? You're probably thinking, hey, that's support. I'm going to go ahead and buy before this person. So what they do is they put that trade in the dark pool where it's hidden. And they can do what's called an iceberg order. They have 100 shares, they have 200 shares, and they slowly keep refreshing it, right? And you might have seen it if you watch the level 2, you see that it gets refreshed. It's almost stuck there. It might go down, it might come back up, and then it just sort of hangs there. And it could hang there all day. Sometimes it'll hang there for 1 day, 2 days, a week. And they don't have to report the completion of their trade until 3 hours after it's completely filled. So in the middle of the day, 11 o'clock to 2 o'clock, we start to see all these big prints coming in. And right now, again, it's April 21st, not the 20th. We've seen some crazy dark pool activity, which means that a massive move is coming. Well, we had a pretty big move, right? In the past 2 days prior, we saw lots of big prints. And so they think they're sneaky, but we still see them.
Right. So you're talking about when you're trading the dark pool, you're just paying attention to the time and sells, the bid and ask, refreshing. You're not talking that you can actually see those orders, right?
You can actually
actually see them.
Right. Well,
Okay.
when they're on the level 2, you don't see the order. We see the prints after the fact. So
Gotcha.
For anybody that's new that doesn't understand what a print is, you've got a transaction of a buyer and a seller. So in the case of a dark pool print, you've got one massive buyer or massive seller and lots of little retail traders. So many times you will also hear, hey, the market can't go up, or the market's can't stop going up. This is a great time to get in. A little bit of reverse psychology. Buy, 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 buy. Why is there all that advertising to buy? Sometimes there's somebody selling, right? So if you want to sell millions of shares, what do you have to do to convince the general public? Tell them to buy, right? It's like the greatest pump and dump scheme of the market. And yes, the market is manipulated, just like pump and dumps. But this is the dark pool manipulation, where they are turning around. These news broadcasters talk about stocks all day long. And what does the news do? It's always reporting. So it's always happening after the fact, right? So if you try to trade the news, too bad, so sad, you're always late, right? The dark pool prints always come first. We see them. We see the move that starts. And then we're like, okay, guess what? The move is starting. It looks like they're selling, right? We try not to think and over analyze it in the beginning, but we'll say, hey, okay, it looks like it's selling. So maybe you short the stock or you buy some puts. Pretty straightforward. So sometimes It happens, you're on the wrong side. Maybe they're not done yet, right? Maybe they were actually buying, but they wanted to buy some more lower. So we call that a splash. And then it goes up, and when it goes up, man, it can go incredible, right? Or vice versa. We saw the sell prints happen at the top back in January and February. They've been laying these prints and this groundwork for months. And so not everybody is a believer that the market is manipulated. However, we have pretty good evidence and history of it happening.
Yeah, no, I like that. Would you consider yourself that is like your focal point as a trader currently? Like you're more of that type of trader?
I definitely follow them because why wouldn't you? If you have this information, and say you wanted to buy Disney stock, right?
Right.
And in the past couple days, this is just an example, it's not concrete numbers or anything like that. Maybe there was 500,000 shares that were sold $2 above where we're trading.
Okay.
Would you want to buy if you know that there's a big print above us that was potentially selling? We don't need to know why they're selling, but just follow them down until we start to see those prints at the bottom, because they will put prints in when they're done with the move. And then, hey, okay, look, now the prints are coming in. Maybe it's time to buy.
So how does one track that? I mean, like, because, you have scanners that pick up, there's scanners that just pick up big prints?
There are scanners that pick up big prints, but we actually, in the Java pit, we actually have a file that goes back 3 years. So we can see for the stocks that we track, and we're talking, like big name, large cap stocks.
Right.
They're not going to be doing it so much on the micro cap stocks because it's also that we're looking for the abnormal volume activity, which can be great for a micro cap stock. If you are scanning for that abnormal volume activity, that's great. You can see them sometimes. You can see them sometimes on the charts. You see a volume spike. Sometimes you see it on a crazy particular ETF. Like I don't know if you have charts right there in front of you, but if you look at SPLV right now, we just had a crazy print of 700,000 shares that came in today. That's not normal volume activity for that stock. So when you look at it and then all of a sudden it's like, hey, wait, this stands out like a sore thumb. Why are they doing this, right? It could be a print at the top or it could be a print at the bottom. Somebody might know something about earnings. We don't need to know the inside information. We follow the guys that do.
I like that. I like that. So these are more like I would assume, and let me know, you're swinging most, or really just until the move happens, the actual move that you're in. So sometimes you're swinging, sometimes it's a day trade, right?
Correct. You can do both. You can really do both.
That's cool. Go ahead.
They're not necessarily looking for a 15, 20-cent move. Many times it's just dollars or a trend change.
Nice. So I want to take you back at the beginning because you said something that you went from value investing to day trading to. So I'm curious if you could just give us some insight on were there some things that now looking back that you're a trader where you're at today. Mm-hmm. Can you look at some things that you brought from value investing to day trading and vice versa, kind of merged them? What were the benefits and pros and cons that you were able to kind of mix into your own strategy?
Well, value investing, it's really like long-term holding of, like my dad's a long-term value investor. So very, very different thought process, right? Overall, the market is bullish. Why? Because you always have people, except for now, we're sort of an anomaly, where people are working, right? And as those people are working, many people choose to take money to put into an IRA or 401k, and then their employer might match it too. So you think every Friday there's this money that's coming out of people's paychecks. It's going into wherever their 401k or IRA is being held, and then that's getting dumped into the market and it's buying more, right? Yep. So that would be dollar cost averaging because you are buying a little every week. So your average cost is going to average out over the time frame, right? So for the long-term picture of the market, it's bullish. If you just put money in, it's bullish, right? But with the day trading perspective, especially around the dark pool, it is much more related to, hey, what is happening now? And where are we in relation to these really big guys? right? Are we above them? Okay, if we're above where they had their trade, we want to be bullish. If we're below where they had their trade, we want to be bearish.
Okay. I like that. 'Cause you remind me of a gentleman I interviewed not too long ago, Smash the Bid, where he's more so looking at these big prints too. He loves trading off of that. So it's for anyone who's listening, you can definitely listen to that one too, so you can kind of get two different perspectives on this strategy because it's very similar, not the same, but very similar. But what I do want to find out, if you can tell me, if when you started to see your own progress, right,
Mm-hmm.
at the beginning, right, we're going to kind of go back to the beginning. What was the first strategy you found success in?
Originally, it was reversals. So it was looking, hey, watching a stock that might have gapped down, and then all of a sudden it bounces in the middle of the day, right? So, hey, there's been a short. All of these day traders are wanting to get out. They're closing their short positions, and it's a mini short squeeze. And then that's pretty much what I traded all along the time until I found the duck pool.
Nice. And so would that be something that, just to put it in perspective, go a little detailed, is that more something that is even on the first red day, you would kind of be doing those kind of plays, but on the buy
Yeah, for
side?
sure. Yeah, because sometimes you could see a past support level as well, or you could feel that tension when the price action is just stalling. And many times, just like buying the pullback, right? I would buy the dip, right, on a stock that has dropped. And then as soon as it started to curl over, hey, go ahead, get out, right?
Yep.
So it would be a smaller trade, but because it was a mini short squeeze, it was a pretty quick trade.
Gotcha. Gotcha. Would it be something that you be going for the panic or more so waiting for the bounce and then the second high, lower high?
I would be buying many times off of that first bottom,
Okay,
right?
cool.
And
Yeah.
then I'd sell it at the bounce high, like the dead cat bounce high. So I'd be trading that dead cat bounce, or i.e. a mini short squeeze, which is
Yeah.
basically what the market just had in the past 30 days.
Yeah, it really did. And it's funny, the whole overall market literally looks like the framework. It's crazy.
Yeah.
But I'm curious on just doing that strategy when you first start finding success. There's might be traders out there who are trying to find their own success right now, right? And they may know that strategy and they're like, man, I'm trying to do this strategy, but it's very scary to buy during this drop. And how did you overcome that yourself? Because I'm sure it was hard at first, right?
Yeah, well, you also have to be nimble and be able to get out. If it starts to go against you, get out because it could get catastrophically worse, right? If all of a sudden everybody's pummeling in and selling the bid, then it could get much worse. So knowing that, but also you have to find what works for you, right? I started tracking with a spreadsheet and I was watching what happened to these stocks that dropped and I started doing more research. You have to work you have to find a trading style that works with your risk tolerance, your capital, and the time that you can devote to being in front of the computer to watch it. Because if you are in something and it doesn't mesh with those aspects of yourself, then it's not going to be the right strategy for you. Just like trying to find a mentor or someone to learn from. You have to find someone that somewhat meshes with your strategy. You might want to be the best low float trader that's out there, but you can't pull the trigger easily. That can be a hard thing, right? And in
Yep.
trading, you're going to face your biggest demons and your biggest weaknesses, and you have to master them.
Absolutely. I agree with you 100%. And until I figured that out myself, I was just constantly just frustrated. And then when you got to discover your own path is when
Mhm.
you kind of really start to blossom. So I'm glad you shared that. And, before we start to wrap this up, I do want to ask you something. If you could go back in time and give yourself one word of advice to help yourself progress a little bit faster to where you are today, what would you tell yourself?
Patience for the optimal entry.
Okay. And then the other thing, since you answered that so quickly, is if you could tell anyone that may be in that boom and bust cycle, I'm talking about, who are like they'll do well for like a couple of months, maybe a couple of weeks, and then they'll just blow up, right? What would you tell that person?
I would say go ahead, make sure that you're journaling your trades so you can see what is going on. And not only journal just the trade, but your emotions with it, as well as, you know, in the training pit, we teach people more than just trading. It's nutrition as well, exercise, energy. You have to be aware that how you come to your desk in the morning, where your mindset is. If your mind is cloudy on something else, hey, is that the best way to trade? Are you stressed out about the virus that's going on? Are you stressed out about losing your job, not having enough food? All these other aspects can take away your energy from you to be able to focus on the trade. And you need to be focused when you sit down to your desk. So you need to track that sort of information as well. So you can see, hey, you know what? Every time that I exercised, I did really well. Maybe it had to do with the blood flow going to my brain. I was sharper. I took my vitamins today. I ate a great breakfast. So see how those other attributes can go ahead and fit into your trading.
Because you're helping other traders pretty much every day, right? You're teaching
Yeah.
traders. So have you found a question that's come up that they feel like that if they get the answers to this, all their problems are solved? If there's a question like that, what do you feel like that is? Just so you could shed some light that obviously is not the only thing.
Yeah, no, right now, I'd say most of the traders are really thirsty to learn, and they're thirsty to learn this strategy because they see time and time again that it performs, and it's a lower risk strategy with higher returns. And when you're able to have that in trading, low risk, high return, high reward, then that's a great combination. So there isn't necessarily one question. I mean, most people, their hardest question is learning about the charts in the beginning
Hmm.
because to some people, it's just complete Greek to them.
Okay, that makes sense. And just so everyone can, let's say someone might want to reach out to you, have some questions, they want to find out more about you. Where would they find you?
Well, you can pretty much Google me as Airplane Jane. I'm also Jane Galena. And I'm pretty much everywhere, but I'm on Facebook, I'm on Twitter, I'm on LinkedIn, I'm on Instagram, I'm on Ticker Talker. Every morning I do a live channel where I walk through my watch list that I go ahead and create. I teach in the training pit twice a week, which is at thedarkpools.com. And the easiest way someone can reach me is email. Just do jane@cjanetrade.com.
Perfect. Well, Jane, look, I appreciate you being here today and answering my questions and just helping people out. I really appreciate being here, and hopefully, maybe one day, we'll bring it back out.
Awesome. Sounds great. Thank you so much, Alex.